Good day, everybody, and welcome to the ACT Middle East Treasury Summit and to this Treasury Lab 2, Banking Relationships in a Post-COVID-19 World. My name is Peter Matzer, and I'm delighted to be your host for this session, in which we're going to discuss the nature of relationships between banks and their corporate customers, both during and after the pandemic, and what they see going forward. I'm delighted to be joined by Anshuman Shankar from the Commercial Bank of Dubai and Stephen Buonvino from Citi. Some housekeeping first. There is a Q&A tab on your screen, and please do feel free to enter questions for the speakers, and we will try to get to them either during the session or towards the end. So if there's something that comes up to you after a few minutes of hearing it, please do put the question in and we'll try to return to that subject towards the end of the session. The session is being recorded and will be available for replay for up to 14 days on the event platform from the end of the day. So if you're unable to fully follow us all today, or you want to pass this on to one of your colleagues, please do so and they'll be able to review the session. Please also remember to get engaged with the ACT on social media, following us on Twitter at ACT Update, using the hashtag ACT Middle East. The COVID-19 pandemic has, of course, changed a great deal of the dynamic in terms of the relationship between banks and their corporate customers, not merely the obvious one in terms of the social contacts and social distancing, but perhaps in terms of people's views on technology, on the nature of services and the nature of those relationships. So I'm delighted to have these two expert analysts with me today from their banks, and we're going to cover a number of the issues that we hope will be of interest to you all. My first question to Anshuman and to Stephen is relatively straightforward. Hopefully, as we exit the pandemic and we look forward into 2022 and beyond, there'll be some changes, but perhaps also some new ideas in terms of the nature of the relationship between banks and their corporates. So Anshuman, where do you see that standing at the moment, and where do you see those relationships going forward?
Yes, thank you, Peter, and I'm very excited to be part of this webcast today. Yes, to your question, clearly, I think there is a sort of a recalibration in our relationships with our corporates across the board. And I think pandemic has taught us a lot on both ends. But I think simply put, I think digitization is one stream which I think has become very, very prominent. I think there has been a monumental shift from a physical to digital, and that's been seen on both ends. So while banks are trying to improve their digital prowess, we've also seen a lot of these corporates also, adopting this much more than we've seen in the past. And this is also the future. And I think this is good for the overall ecosystem because I think digitization is a way forward. What I also see is a lot of cost rationalization is happening, right? We've been pushed to the corner. There have been a lot of challenges which we've seen. So I think cost rationalization is another thing which is again happening on both ends, the banks as well as the corporates. But again, coming back to the point, I think we've come closer from this situation, and I think we are all working hard together to pave our way forward towards something bigger and brighter.
Thank you. Stephen, when you look at this issue, what does it suggest to you in terms of the way that your institution, but also your peer institutions, are having to organize themselves, are having to change themselves? What are they investing in terms of the relationships that you and they have with corporate clients?
Thank you, Peter, and thanks for the opportunity today. Yeah, I mean, I think the one thing I would say about the pandemic is it sort of level set everyone globally. No matter where you were, who you were, industry, sector, everyone was impacted, and I think that brought a great deal of empathy actually across the whole landscape. So everybody had the sort of same issues that we were trying to deal with, and I think as a relationship bank, we saw our role in that, just try and take care of our customers. I think that's our priority, and that meant different things to different customers, because I think for some of the customers we had, some of the big platform digital clients, actually COVID was an enabler. It was an enabler for them to drive further digitization, to look for expansion. The B2C adoption in the COVID environment was huge for all of us. I mean, we all experienced that. We all sat at home. We all ordered things online, from food to anything, really. Certainly here in Dubai, there's nothing you can't order that can't be delivered to your door within a few minutes. So I think for some companies, it was about growth and how could we help them with that growth. And I think for us, that was around enabling the digital flow. How can we help them connect and collect predominantly from customers, do that efficiently, reconcile those collections, make sure that credit becomes available. So I think there was a positive take on that. But I think there was also many industries whom we supported that were struggling, that were looking for credit or were looking to shore cash. And that cash was, in the form of deposits. Rates are not in a great place for anyone. So companies were kind of holding on to cash, but they weren't able to realize a lot of benefits from those sort of cash pockets that they had consolidated. But what we see now is I think a shift in mindset, and that cash that was shored up for many customers is now being released into investment. And we see a lot of that in technology investment, and in a positive way. It's not the case that customers are sort of looking back. I think, as all of us are, not looking back to say, how can I get back to where we were, but to say, what have we learned in this difficult period, and how can we leverage some of those things that were forced upon us to actually improve our efficiency, reduce our costs, and to help grow our top line through maybe the adoption of e-commerce models in industries that were predominantly face to face or were in the physical world, that have now shifted to digital. So I think there's a sort of two sides to the story, but certainly for our clients, we see now, I think most of them coming into a very positive view, and we're there to support them both, locally here and globally across our network.
You've both talked there about a move to digital banking across a range of sectors and a range of products. I wonder, Anshuman, whether or not that suggests that banks are moving towards, if you like, a generic set of digital products they're offering to clients, or are you differentiating perhaps because of the size of your client, or because of the industry or business sector that they're in, or, for example, whether they're in private sector or public sector? Perhaps you have a few thoughts on that.
Yes, absolutely. I think we are cutting across the entire spectrum. In fact, the adoption of digital usage is across retail bank, wholesale bank, big clients, small clients, private banking clients, SMEs, everyone. But just to add to that, I think it's two ways of looking at the digital journey which we've adopted. One is the distribution channels itself, right? So previously, if somebody wanted a cash, they have to come to the branch. That is not needed at all. Right. So one is the channels part, and one is the products per se have become very digital now, right? So earlier, very physical movement of a certain transaction, either on trade or transactions or remittances, have all become digital, right? You can do it from your palm, right? Hitting a few buttons here and there. So yes, I think on both ends, whether it's the delivery part or whether, making a product per se as a digital proposition, I think is being made within CBD and cutting across the entire spectrum, as I mentioned.
Stephen, what would be your view on that? I mean, obviously, we know that there's a cost involved for financial institutions to be providing digital services, perhaps offset with some other cost efficiencies elsewhere. But does that lead you towards a generic set of technical digital products, or are you still being forced to segment what you're trying to achieve for clients?
Yeah, it's a good question. I mean, I think there's a combination of things. I think one, I would say, is driven by regulation. In fact, actually, many of the central banks across the Middle East and beyond are encouraging member banks to drive instant, because instant payments, instant collections is coupled with API, which is on the bank side typically, is the ingredients to enable that digital interaction with your client. There's no point having an instant payment with a batch process that sits behind it. That doesn't make sense. So the whole thing's got to be end to end. So I think our strategy has been to look at the different sectors maybe that could utilize these digital tools and build those out. Of course, with a branch network of spanning 100 countries, we have a lot of scope to build and develop those tools, but it comes at the cost, as you rightly say. So we have to prioritize with those, and I think what we try to do is certainly meet and understand our customers' priorities, size of market. Is it B2B? Is it B2C? Do we have a consumer bank in that market? Can we leverage anything that's happening there? Bearing in mind we're on the institutional side, so I think that's key. But I think the other element that I hope customers have benefited from through the whole digital experience is the onboarding. Gone are those days, not everywhere, unfortunately, but in many places where the document gets posted, someone signs it, someone counters, someone stamps it. Those things were not, we were not able to support a lot of that activity. And actually, in many countries, we had already a digital onboarding process. But what this did was allow that to sort of accelerate and allow us to focus actually investment and time into something that was arguably the biggest pain point for our client. Having multiple payment methods is great, but the pain that everyone feels around opening accounts and the dreaded KYC that everyone has to go through, to try and digitize that, I think, and I'm not saying we're in a perfect world, but I think we have gone a long way to opening accounts now in 24, 48 hours across a lot of branches, trying to encourage that activity. So I think we're not, there's a journey, right? We're on the journey, but I think the digital payments and collections. And the last point I'd make, just I think something that we changed a little bit in our strategy is, rather than build everything ourselves, is to create partnerships with fintechs who can deliver that unique service. You can't build everything for everyone, but what you can do is use your core technology, your structure as a large trusted corporate bank, to engage with other trusted partners and sit between the customer and those partners, so they don't have to go and be onboarded by multiple sort of third parties. And we found that to be a huge success. Certainly in countries like Egypt has been a huge success for us here. So more of that to come, I think, and I think that's the strategy for us and other peer banks, is to figure out what do we do well and what do we do well at, and what could others maybe do with us, and that partnership is strong.
It wouldn't surprise you to know that the first question that someone from the audience has put in concerns KYC. It's been a thorn in the side of corporate treasurers, I don't know, probably since the Florentine days of the 15th century, I'd imagine, but certainly more recently. Interesting point you make there about relationships and partnerships, not just with corporate clients, but with other third parties as well. And Anshuman, I'd be interested to hear your views on, in terms of when a bank such as yours looks at the investment required to meet some of these digital challenges, how do you balance what you're going to do in-house versus what you might use on a white label basis, or what you might use on a public partnership basis?
No, clearly, I think there is always a cost benefit analysis which is done at every project level. And as I think Stephen was pointing out, I think there is a lot of partnership which is happening. I think what banks can do and can't do, we know very clearly. I think we are big in our size. Some of the decision making can be slow. We may have the desire to invest, but again, you have to move a lot of things, right, to get things moving. So sometimes it's easy to just partner with, a very agile fintech entity who's already brought the solutions our way. And I think that those tie-ups do happen. So yes, I think at CBD, there is a prioritization which has happened, where we put it in probably 3 buckets. One is something internal to us, where we keep upgrading our own systems to see what can be done in-house, and the rest is either outsourced or even white labeled. So yes, all 3 areas are open, but everything is being through a cost benefit analysis.
And just a quick follow-up question on that, and something you mentioned earlier that someone is referring to. There's a suggestion that sometimes the terminology and technology that we use, we can confuse automating process with digital processes. And the question is also referring to perhaps the different ways in which you're looking at perhaps your small or medium-sized clients versus your large or multinational or international clients. Hence my question earlier on also about generic process. Do you think there's a difference there, or and that comes into your cost benefit analysis?
Yes, so I think we clearly differentiate between what is automation, what is a true digitization of a proposition, and I guess both are happening together, right? There is also an automation which is part of improving our cost structures and rationalizing that. So I think right. I mean, sometimes there could be an overlap where we are confusing one for another. But yes, I think both are happening at the same pace. But yes, when I talk of digitization, it's a true digitization of a proposition or a delivery which is happening today. Like I think even Stephen was mentioning, right, the entire onboarding process. That's not just automation. That's a true digitization where you just don't have to, put anything in person and keep moving papers. I think it can all move digitally, and the experience is much better.
It's clearly an issue. We've had one or two questions on that. Hopefully we've addressed some of that. I want to move on now to something that I think is quite important, and it's about the two-way street nature of corporate and bank relationships. Perhaps I'll start the question with you, Stephen. I'm interested in perhaps two or three things that you think that corporates can do better to help you provide them with a better service.
Sure, and I think there's definitely room for improvement on both sides. Let's be. I'll
we'll get to the bank side, I think, after as well.
Yeah. But from a corporate engagement side, there's three things I would say. One is think of us as a partner, not the supplier. Often you find you're asked to deliver a product which is comparable to someone else, and then the only comparison you're really being judged on is price. And I think that's like buying a commodity. And I think I would encourage customers to engage with us early and help us understand what it is you're trying to achieve end to end, and see what it is we could help you with. Because I think that sort of start and end point of where banking used to play a role has expanded and adapted over time. It's not just, we have a balance sheet, so we lend money and therefore we expect some business. We have to be competitive, and we need the input from the corporate to tell us what it is that you're trying to achieve, because that helps us deliver for you, and of course hopefully for others like you. That's our plan. And I think that sort of lends itself to the second point, similar, which is this co-creation. And again, I think the come to us with a sort of problem statement. That's okay. I like that kind of conversation to say, Steve, this is what I'm trying to achieve. That's it. Simple objective. We can get in a room, we can figure it out, whether it's us, partners, people we know, other banks. There's a whole network beyond our own branch that we can bring to bear, and a huge amount of IP in the bank. I mean, we have economists, we've got FX experts, we've got debt capital markets guys. Everyone of every sort of financial angle is here, and we can certainly bring them in. And I think the last part I would mention is something around ESG, something where we see it sort of headlined out, but I think what I've seen with a lot of treasuries, not all treasuries, but many, is how can I find a home for ESG in Treasury? And again, it goes back to that. Ask the question. We have some great ideas. We've had some good examples of how we can help Treasury be part of that broader corporate objective of being sort of ESG compliant, if you like. And it's those questions that may not be obvious for a bank that I think you should ask us, your relationship managers, and we'll certainly see how we can help. I think the scope has broadened in what we can do. So that would be just a couple of things, Peter, from my end.
I'll come to the reverse view on that in just a moment. Anshuman, would you have anything to offer there about how you think corporates could drive the relationship to be better for them?
Yes, I think beyond what Stephen was mentioning, clearly, I think the transparency of the financial, disclosures, right, and more so now, right, in the post-COVID era, we do understand that most of these business models have been challenged. So I think if they treat us like a true partner, I think early alerts are very, very critical. I think banks are here to really support. I think empathy is something which we've discovered in the last 2 years. As much as never in the past, right? So I think if you can give us early alerts and be transparent, I think bankers would help. I think banks will hate any surprise, and which is why sometimes the reaction is a bit abrupt. But I can assure that corporates who've been with us, and if they can tell us what are their pain points, I think we will join hands and work that out.
Just across a number of emerging developing markets, there's always the issue of the nature of the businesses you're dealing with. And in particular, of course, in the Middle East, we have a lot of family offices and privately held companies. Is that a particular issue in this context, do you feel?
So yes, we do believe that there are certain pockets where maybe the financial disclosures are not as good as in other segments. And we clearly see this a lot in the UAE, right? There are certain pockets clearly where they do lack, where we have to draw a lot of comfort from, the name or the sponsor behind that entity. Having said that, I think again, a post-COVID would want not just those pockets, but every segment to really, come out with their projections and planning in a much better way to convince the bankers. And as long as we can see that vision, I think we will go the full length on this. I think we want to extend credits. We have an appetite. There is liquidity which is supporting. So I think these are the few things. If they can tick the boxes, I think we are there to support.
And just briefly, Stephen, on that specific point about transparency, is that something that you find is a key part of the relationship? In other words, information coming from the corporate to the institution bank?
Yes, I mean it's always been a sort of a requirement, but I think that the difference that we've seen, and I've seen this many times myself in working with clients on opportunities in the new digital world, is we don't know the size of that business. This is not a shift of business. This is not, oh, I bank with HSBC, let me take that business to you, Citi. How much, it's not a price or commodity game. It's I have an idea, or I want to pivot my business away from physical to digital. Can you help me with? And that's a sort of question that we used to ask the same question. What's the volumes? What's the values? That would derive, a risk appetite, a price, and everyone was happy. We went away and we sort of went on the merry-go-round of doing RFPs. It's not like that anymore. So I think we as banks, certainly Citi, on our end, I think we've become a little bit more comfortable with having taking some risk-based bets, let's call it, on some either new customers where we have in our commercial bank, which is our bank that looks after sort of the SMEs, or even with our larger corporates who want to diversify and look at a new business. The way we think about it is, if we want to be your partner, we need to deliver a product, we need to deliver a price that is going to enable you to succeed and succeed in the long term. So if we try and price something in the short term that discourages the whole business model, nobody wins. So I think trying to take that balanced view, and I think from our perspective, we're fortunate in as much as we have experience from the 100 branch network to say, well, we saw something similar elsewhere, and that worked, or that didn't, and why didn't it? And we can maybe share that advice with again, it's sort of advisory as well. So I think all those things come together and say, let's take more of a balanced risk approach to things rather than the pure financials. And that's worked well, I must say. I think that's worked well for us so far.
That's all very well. Let me perhaps play a little devil's advocate here and start with you, Anshuman, and ask the reverse question. What if I, as a corporate treasurer, were coming to you? What should I be expecting you to do better for me? I don't necessarily mean solely in terms of your own institution, but in terms of your own institution, but also in terms of the banking sector, whether as a supplier or partner. What should I expect you to be doing better?
I think the answer starts from the very basic requirement, which is to continue to provide liquidity. I think last 2 years, I think everyone was trying to preserve liquidity, and that was key. I think as banks, we cannot become frigid about a situation. As long as we can see a proposition on the corporate, we have to extend that liquidity, and we've done it. I think most of the banks in the country have been helpful to the corporate. So that's point number one. But I think beyond moving from the loan aspects and the liquidity thing, I think it's also the nature in which we have to kind of extend these products, right? So a lot of new products in the new digital era need to come in, which would ease a sort of consumption from our corporates. So I think pricing, liquidity, and products. I think all three needs to improve for make this relationship prosper better again in the post-COVID era.
Should I be expecting my bankers to be more knowledgeable about my sector, more knowledgeable about their own institution? Should I be expecting them perhaps to be better qualified? Are there some aspects to the personal nature of these relationships you think that banks could improve?
No, absolutely. I think there is always a sort of a sectoral expertise which is sitting with every bank in the sectors which they promote. All right. But I think beyond that point, there is a recalibration happening across the board in all industry segments. Hence, the knowledge at our end needs to further improve. And that can happen with partnership with our clients. But yes, going beyond the conventional sectors like oil, energy, shipping, aviation, right? We are also going further granular in understanding what a chemical industries do in these times. What is it, for the healthcare sector, right? It's a very different world. So yes, there's a fair point, and I think banks need to invest more at our ends to understand this, have some sort of knowledge experts to understand our clients better.
Stephen, let me put it to you this way. Are there any circumstances in which you would say to a client, actually, you know what, we're not very good at that. That's not our area of expertise. We think you should be dealing with these folks or doing that business in this particular way. In other words, is there a requirement for some more honesty coming from the banking side?
I think there are areas where we have strengths, and there's areas where we do not. And I think we're pretty clear. I certainly know what they are, and would not want to waste anyone's time in pursuing an opportunity that I thought we weren't the right partner for. And we've done it. I mean, here where we're not present, for example, in certain countries, we're happy to share guidance and advice on perhaps other banks who may be able to help, or fintech partners that might be better served to meet the need of that particular client. So I think that is fine, and I think that happens more and more because, as I mentioned earlier, when we're asking customers now to bring us broader set of ideas, those of course will be parts of those or components of those that we cannot do or cannot do yet. So I think there's a period where we may say, I'd love to be able to do that, but I can't do it now. We are a bit of a big tanker at Citi. Maybe we can't deliver that immediately, but I know a man who can, or I think we could bring in some partners. So I think there's that element. But I think to the sort of initial question, Peter, around what would we hope to do differently as well, I think is we would like to bring some new ideas to clients and say what have we seen elsewhere in sectors that we think could be appropriate for you. And the one area that I've seen make a big difference to our engagement with customers is the use of data. Is actually taking their data often and playing it back through a use case to say, by the way, Mr. or Mrs. Corporate, did you know that your your foreign currency payments that you make in these 50 countries could be done in a different way? They could be done in a local currency. Do you know your supplier has a foreign currency? All this exists certainly in Citi's ecosystem. And what we're trying to do is trying to bring that together into a sort of succinct value prop that is understandable to a client and can be used.
And just to finish out this particular area of discussion, this is a question for both of you, but I'll start with you, Stephen. Performance measurement, both the bank on the corporate, but also the corporate on the bank. What's your feeling on if that's done, how well it's done? Could it be done better? What sort of metrics might you use? I know it's quite a broad subject, but just a brief view, if you may.
It's a broad topic, but a good one. And actually, I mean, from a Citi perspective, we've just concluded our annual Voice of Client survey. So we try to survey every single one of our customers within the bank, albeit that through connectivity with us in the transaction bank or with our banking team, our FX partners, whoever has the closest sort of a relationship with that particular corporate. We ask for them to respond to the survey, and we get a pretty decent response. And that, I can assure you, is taken incredibly seriously and and is impacting people's performance, by the way. So that has a two-way street. You may not see it, but there is definitely in the background a view that says, okay, well, let's listen to the client. It's not, does Steve think he's good? It's what does Peter think of Steve, and let's value that, and let's put that together and figure out how we can do things better.
And Shimon, where do you stand on this sort of balanced scorecard or performance measurement matrix going both ways?
Yes, I think what we use internally in CBD is something called as Net Promoter Score, right? Where we compare the number of promoters of our brand to distractors. And I think what we have realized in the last 12 months, that number has moved positively in our favor. I think this is probably on the back of the support which we've extended to our corporates, right? The liquidity support I was talking about. So I think, and this also sits in KPIs of all our RMs and even the junior staff, right? Because it's not the RM's job alone, it's also the support system which needs to work together, to get that sort of delivery out or the service out to the client. So yes, NPS is the sort of yardstick which you use internally. But the other point, how do we rate our corporates? I think that's a reflection in our financials, in our numbers, right? So as long as my ratios are looking better than last year and my NPL is in control, I think we are also kind of giving a positive report card on our clients.
Right. We're coming to the end of the conversation, so I need to start thinking about wrapping up. But just before we go, I did ask you when we did our preparation for the call if you had a couple of takeaways that you think that corporate treasurers should have from this discussion of the current nature of bank and corporate relationships. And Shimon, what would yours be?
I think 3 points. One again is come back with your plans and your projections pretty quickly. Do tell us about the changes which you are doing in your business model. I think we are more than here to understand, learn, and listen. And of course, I think the moment you do it, I think we are here to again partner with you and support.
And Stephen, reasonably briefly, if you may.
A couple of things, Peter. One, I would say is just continue to be open to change and embrace it. Come to us with ideas, just have a chat. We'll be more than happy to hear you out. The second part is supply chains. Supply chains have been disrupted, continue to be. We can help with those supply chain activities, help your suppliers in your ecosystem, so we can help you beyond your own immediate needs. Supply chain finance, sustainable supply chain finance helps with the ESG agenda. So think of us being able to help you beyond your own sort of corporate treasury, where we're here to support your broader business.
It's quite interesting that both of you have talked about communication in this context, and the questions that have come in that we've tried to address during the session have been about digital and about technology, which of course to some extent are not personal issues. And yet it seems to me that both of you are still talking that this is about those relationships between the corporate and the institution, between the corporate treasurer and the team and the banking team in whichever sector it may happen to be. And personally speaking, and I think from the ACT's point of view, I think that's still to be encouraged. I think that's still a valuable part of people's professional career and their development on both sides of this exercise. Well, I'd like to thank both of my speakers, Anshuman Shankar from CBD and Stephen Buonvino from Citi. To remind everyone that you'll be able to watch this session again on demand from the end of today for the next couple of weeks or so. There is a discussion zone in which you can carry this on with your fellow attendees, of course. I'd like to encourage everyone to carry on participating in the conference, but also to go and visit the virtual exhibition to see what's available there from any number of financial and tech suppliers that are coming along and want to talk to you directly or indirectly through this virtual platform. Please do also fill in the speaker survey, which can be found on the right-hand side of your screen. We do appreciate the feedback, and hopefully if we're back to a live exercise next year in terms of the Middle East Treasury Summit, we'll take that into account when we're planning our program. But it just remains for me to say thank you very much to my two speakers. Thank you all to the audience for participating, and please do have a very good rest of the day. Thank you very much.
Thank you.
Thank you.